Hello everyone, it is Evan from the Trade Risk on Wednesday, August 5th here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then finally some trade ideas for the remainder of the week. Let's jump right in here to the SPY ETF, and you can see we closed green today, but not quite as green as we could have been. We closed up 34 basis points in the SPY, and that was off of the highs of the day. Let's take a look at the weekly chart first. You can see where we failed today was basically right at last week's highs. So right above this 211 level in the SPY is where we found some resistance today, and that's where sellers kind of stepped in and drove us lower. If we go back to a daily chart here, you can see it shouldn't be that surprising. There's a lot of overhead messy supply up here right around this 211 area. We've been in this range for quite some time, so it is going to be difficult to finally get that thrust out of here, and we just don't have that catalyst just yet. But the positive news is the bulls did get a minor win today with this nice gap up. We closed back above this round 210 figure, even though it was barely a close above it, but still we got off of the lows here from the past 2 days of this week, and we are trying to put something together. So continue to look at this market with a glass half full mentality. As long as we're up into the top end of this range, above 208, above 209, 210, this whole mid range, as long as we can stay above here, I try to remain constructive on the market. And there certainly are sectors and pockets of opportunity here. For us at the Trade Risk, we had a really nice day today, actually, with a couple of winners. We had RAD, which we picked up yesterday, which we managed to sell a chunk of right at the highs at 946. We had True, TRU, TransUnion, which is a recent IPO, which doesn't want to load for me right now. There it is. Had a nice win on that today. Sold some towards the highs as well. And MKC, this one's been running for us too, and we continue to be in this one. Took some profits in it today. So there are opportunities out there. I think you just need to find them. You need to be in the right sectors, and you just need to stay selective. So I think, again, nothing's changed here. Still range-bound behavior, still a choppy environment, but you can find opportunity out there. Let's look at the IWM here. The small cap index closed up today as well, but still struggling here. We've been noting the underperformance here in the small cap in the Russell. You can see the moving averages are still heading down. The picture is the opposite here, with the IWM hanging at the lower end of this range. So the SPY is, potentially flirting with overhead resistance, and the small caps are potentially trying to hold on to support here. So it's the opposite scenario. We need to watch this closely. We need to see if how the small caps end up here. We want to make sure that they hold above this 120 support and the lows from last week. Now, if we look at the Qs, again, this continues to be our strength in the markets here. Technology is continuing to do well. We did get a good sized fade off of today's candle here, as you can see, but we did still close up 75 basis points. So trying to get going, got faded a little bit, but still pretty constructive. So we want to see the bulls continue to hold up here. The fast moving averages are in bullish alignment here. We want to see price stay above that and continue to try and work itself higher. Let's look at some other markets now. TLT came off a little bit today. It's been in a pretty strong uptrend since the mid-July. It had a down day. Yesterday had a nice little inside day, and then today we gapped down into some of these fast-moving averages, closed near the highs of the day. So you can see there is a bid of interest here as TLT comes off a little bit. So we'll have to see how this one holds up. Still in an uptrend. Again, buyers still in control here in the short term. It's not too interesting, though, as far as a trading standpoint. Now, the real weakness here is oil continues to slide, and today, you saw the S&P, you saw that SPY really start to trade off there in the basically right after lunch in that afternoon session, as USO started to sell off, turn red. You could see the S&P and that weighting that it has with the energy and the oil services names start to weigh on the SPY, and that's really what brought us down or helped influence some of that gap fill that we saw today in the SPY is this energy slide, and still in a strong downtrend. There's still a lot affected and tied to oil here, so we are seeing the markets react to it and trying to stay afloat despite this slide that just never seems to end. Fast moving averages are still heading lower. USO still looks pretty ugly here. I wouldn't want to be trying to pick a bottom. I don't think there's any real reason to. Want to see it try and stabilize here, take out some resistance. It's going to need time though. It's a really damaged chart, so I wouldn't expect anything too soon from USO. UNG now, also feeling a little pressure today, gave up little over 1% on the day. It's still just going sideways here. It's getting real tight, coiling up here in this almost 8-month range now in UNG. So something has got to give eventually in UNG. It needs a little more time, but basically looking for above 14 or under 13. I think those are the broad levels, and I think you could probably play a breakout in either direction. So right now it's dead center. Let's see which way UNG wants to move. Metals, gold continues to slide today down a little bit, heading back to these lows here. Looks like a fairly actionable short, setting back up in gold again. And then silver, similar situation, not as tight and clean, but still near the lows and still feeling some pressure overall. Now let's look at some of those leading sectors. Continues to be the consumer staples, XLP. Look at this candle today, closing on the highs of the day. Lots of strength here, up almost 1%. And these are your slow, boring names, and there's definitely rotation. There's been rotation in this in this sector, and ever since breaking out of this range in late June, it's been moving higher. So that's definitely a trend that you don't want to fight right now. Utilities, I'm sorry, not utilities, healthcare also perking up today, closed up 82 basis points, trying to break out to new all-time highs here, but it is shaping up, trending higher, fast moving averages, bullish alignment below price. That is constructive. IBB continues to be constructive, and a fade today, but still holding up overall. And even financials trying to get going today, couldn't quite close on the highs or clear out of this 25-30 or so level, but it's fighting to. Still in some pretty bullish alignment there. And of course, energy, like we talked about, is the dog. This is the sector you want to avoid right now. Unless you want to try and accumulate for the long term, pick a bottom, be tactical. But for now, this trend is strongly down, and it's anybody's guess as to how long that could continue for, or how long it needs to go sideways before it could catch a meaningful bounce. Let's look at some individual names now. We'll start with Apple. So Apple got crushed between the last 2 days, snapped this 122 support. And I mentioned this on the streams the other day. This is why I love looking at volume at price. So basically how long price is traded at a particular level. Now, if we look at a quick example here, 122, moving my line now to 133, 130, there's been a lot of supply traded in this area. That means, there's a lot of price memory there. But when price breaks into these low traded areas, so that's below 122, you can see we didn't trade too much in here. We just had a quick move higher at the end of January. So when you start to re-enter these levels, look how fast price can fall, because there isn't a whole lot of previous supply traded in there to sort of slow price down. And that's what we saw over the past 2 days. We saw a very, very quick move in Apple on this 2-day slide below support. And again, we talked about this in our last previous videos. 122, the bottom end of this candle here, which was the candle immediately follow earnings, would be a very good line in the sand to basically measure up against. And you can see as soon as we lost that, we got a quick downside move. Unfortunately, we didn't capture any of this at the trade risk, but Apple for now, we saw our snapback rally today, still damaged. Fast moving averages racing lower, just not an interesting setup right now. The setup was 2 days ago to catch a short down here. It already happened. Got to wait for something to set back up. For now, Apple is not interesting to me one way or the other, but certainly the shorts look in control there in the short to intermediate term. Google's one that's going the opposite way, had a nice breakout today. Thought this could be potentially a bear flag here. It's proving not to be. So Google looks pretty good. It's defending this gap so far, and I think you get a pretty clear line in the sand as well, 652 or so. If it loses that, I would want to step aside in Google. Netflix gap up today, got faded a little bit. Again, tremendous strength here. We've been talking about it for a while. It's been real tough to catch on board, but Netflix continues to impress on the upside. Facebook, this one tried to get going again today, looking pretty constructive. I think if it gets a little more energy in it, I think above $97, where it kind of stuttered here for quite a bit for these at least 4 days anyway prior to earnings. I think if it can get back above there, it's on its way to $100 again. Facebook definitely in bullish alignment. Twitter, again, we have pairs. We have these bullish and bearish pairs, it seems. Just the exact opposite. This thing breaking support, looks really damaged. Fast moving averages racing lower. This is not something that I'm interested in. This is all-time lows for Twitter. Certainly, I like the company for a potential investment down the road, but from a trading vehicle standpoint, it's just a mess. So I wouldn't be that interested in it. Picking a bottom here can be very difficult, and it seems like there's a lot of stored up energy to the downside. So still an avoid for me on Twitter, not touching that just yet. Amazon, this one's tightening up a little bit. Kind of like what it's looking like. This one followed, of course, earnings, had this big potent sell bar, and then it's been moving sideways here, letting the moving averages tighten up. So this is interesting to me. Let's see which way Amazon wants to break. Tesla now has earnings after the bell, and let me see if I can see where we're at. Looks like we're still flat, and perhaps they just haven't reported yet, because I'm seeing a 269 print or so. It's about 4:15 right now, so perhaps they haven't reported just yet. But Tesla, of course, we're reporting tonight. It'd be interesting to see if it can hold this 250 level or so on the downside, 285 on the upside. I think those are the two immediate levels you want to be watching. Amazon, as we already talked about, and finally GoPro, last one we'll talk about today. It's going sideways here, setting up. I like it. It's holding above $60. Moving averages are catching up. A few more days of sideways, and I might be interested in playing a potential breakout here if it decides to. So I like what GoPro's setting up. Needs more time, but it is constructive there. So let's get into a few names going into the end of the week. PEP is the first one, consumer defensive sector here. This one had a nice breakout today on a weekly chart. I think you see what I'm looking at here. It's been consolidating nicely for all of 2015. It's making a nice breakout bar. This one looks good, and it's got that nice round $100 level right above it. I like the setup of that on the weekly chart. EL is the next one. Similar setup here. It's been consolidating for a lot of 2015 since May. $89, $90, call it, is the overhead level to break out of. It did. The chase is on just a little bit. Again, consumer defensive sector, but this is where the money is rotating to, so this one looks very interesting if you can get on board that one. STZ, this one, we've been talking about that one again. Again, the theme, consumer defensive. This one's breaking out of its range that it's been in. Weekly chart, this shows it nice and clean here, up already 2 3/4% on the week, above 121 all-time highs. That one looks good. Another name, ARMK. It's a restaurant name. It got faded today, so it's something worth keeping on your radar. 3260 or so, or really, it's going to be the highs from today, or right around 3270. If you look on a weekly chart, you can see it's a recent IPO. It's been moving sideways now. Looks like it's trying to get going. So this one looks pretty constructive here. So keep that one on your radar. And then finally, Wayfair. This one tried to get going a little bit today too. Got faded a little bit. That $40 level is where it's running into some resistance. If you look at a weekly chart, this is a recent IPO as well. This is also the highs basically from its IPO day. So right around $40, you want to see it get above there, and it's free to push higher into all-time uncharted territory. So that one looks pretty good. And that's all I have for today. As a reminder, check out the Trade Risk premium service that we run, traderisk.com/premium. I've had a lot of nice winners. We've been outperforming really nicely over the past 2 months while things have been pretty difficult. So check us out, traderisk.com/premium. Thanks for watching, and I will catch you next time.